As the corporate debt crisis continues to escalate, the future of the global economy hangs in balance, with companies taking on unsustainable levels of debt and struggling to meet their financial obligations. The risk of defaults, bankruptcies, and other financial problems is increasing. In this video, we will delve into the root causes of the corporate debt crisis and explore its potential impacts, as well as discuss what we can do to mitigate these risks before it's too late. The corporate debt crisis is a situation in which companies have taken on too much debt and are struggling to meet their financial obligations. This can lead to defaults on loans, bankruptcies, and other financial problems that can have far-reaching consequences for both the companies themselves and the broader economy. One of the main causes of the corporate debt crisis is the low interest rates that have been in place for much of the past decade. With borrowing costs so low, companies have been able to take on more debt than they may otherwise have been able to afford. This has led to a rapid increase in corporate debt levels, with many companies now carrying unsustainable levels of debt. In addition to low interest rates, there are other factors that have contributed to the corporate debt crisis. For example, many companies have been engaging in financial engineering, such as issuing bonds to fund or share buybacks, or paying dividends to shareholders rather than investing in their business. This has allowed companies to boost their stock prices in the short term, but has increased their debt levels and made them more vulnerable to financial distress. Another factor that has contributed to the corporate debt crisis is the increasing reliance on leveraged loans, which are loans that are made to companies that already have a high level of debt. These loans are often made by non-traditional lenders, such as private equity firms, and they often come with looser lending standards. This has made it easier for companies to take on more debt, but it has also increased the risk of defaults and other financial problems. Overall, the corporate debt crisis is a complex issue with multiple causes, but it is clear that the low interest rate environment and increasing reliance on the debt are major contributing factors. But what are the potential impacts? The corporate debt crisis has the potential to cause serious economic problems, both for the companies involved and for the wider economy. If companies are unable to meet their financial obligations, it can lead to defaults on loans and even bankruptcies. This can result in job losses and financial hardship for employees, as well as a decline in the value of company shares. In addition to these direct impacts, the corporate debt crisis can also have indirect effects on the economy. For example, if a large number of companies default on their loans, it can lead to losses for banks and other financial institutions. This in turn could lead to a credit crunch where banks are reluctant to lend money, which can have a negative impact on economic growth. The corporate debt crisis can also have broader implications for the economy. For example, if companies are struggling to meet their financial obligations, it can lead to a decline in consumer and business confidence, which can lead to a slowdown in economic activity. In addition, the corporate debt crisis can lead to a decline in the value of financial assets, such as stocks and bonds, which can impact the wealth of investors and lead to a decrease in economic activity. Overall, the corporate debt crisis has the potential to cause significant economic disruption and hardship for companies, employees, investors, and the wider economy. It is a serious and complex issue that requires careful attention and action to address. So, what can we do about the corporate debt crisis? There are several steps that governments, companies, and individuals can take to address the corporate debt crisis and mitigate its potential impacts. One important step is for the government to adopt policies that encourage responsible borrowing and lending. This could include measures such as stricter lending standards and increased regulation of financial institutions. For example, governments could require banks to hold more capital in reserve to protect against losses, or they could implement regulations to prevent companies from taking on excess levels of debt. Companies can also play a role in addressing the corporate debt crisis by being more careful about how much debt they take on. This might include reducing debt levels, increasing profits, or finding other ways to improve their financial stability. For example, companies could focus on investing in their business and expanding their operations rather than engaging in financial engineering or relying on leveraged loans. Individuals can also help by being more aware of the risks associated with borrowing and investing. This might involve being more cautious about taking on too much debt or choosing investment opportunities that are less risky. For example, individuals could consider investing in more diverse portfolios rather than putting all their money into a single stock or bond. Overall, addressing the corporate debt crisis will require a multifaceted approach that involves actions from governments, companies, and individuals. By working together, we can help to reduce the risks and protect the stability of the global economy. In conclusion, the corporate debt crisis is a serious and complex issue that requires immediate attention. If left unchecked, it has the potential to cause significant economic disruption and hardship for companies, employees, investors, and the wider economy. However, by taking action to address this issue, we can help to reduce the risks and protect the stability of our global economy. We hope that you found this video informative and that it has helped you to understand the corporate debt crisis and what you can do to address it. If you enjoyed this video, please consider subscribing to our channel and liking the video. Thank you for watching and for your support. Have a wonderful day.